What's up, everybody? This is John Barr with Prime Homes, and sorry I wasn't able to be there tonight. Had some prior obligations with a rehearsal dinner for a wedding I'm in this weekend that is at the same time that this video is probably showing. But I still wanted to get you guys the market update for the Ala Maria because I know a lot of people like it. I get a lot of good feedback from it. So just wanted to make sure that I got it out this month, so I decided to shoot a little video of it this year. Now it's not gonna be able to do any questions, and I won't be able to stop any presentations for any kind of pictures, but at the end I will put my email address up there, and if you have any questions you can shoot me an email, or if you'd like a PDF copy I'd be more than happy to share it with you. It would be just john@primehomes.com. So we'll go ahead and get right into this. So the June number overview, the average sales price was $257,753, which was a 4.21 increase from this time last year. Median sales price actually jumped this month by $10,000 from last month, and which is a 7.3% increase for year over year. I think it was 2-3 months ago, we broke it above 200 for the first time in San Antonio's history, and now it's really taken off. Usually it goes up by $2,000, $3,000, $4,000 a month, but this month it jumped by just about $10,000. Total sales 3,177, which was a 4.6 increase from last year. Average rental price is up to 1,481, which is a 2.9 increase year over year. Employment, it comes and it goes. Sometimes it's dead on with the month, sometimes it's 2-3 months behind, but I was able to get up to May this month. So employment was just over 1.1 million still, which is a 1.87 increase year over year, but we did lose almost 3,000 jobs from last month, which is a pretty small number when you're looking at over 1.1 million employment numbers, but we did lose some jobs this last month. So unemployment did tick up a little bit, but it was only by 1/100%, so not a whole lot has changed as far as the employment in San Antonio. Month's inventory is still holding strong in a very strong seller's market. The month's inventory is at 3.21, and they say 6 months inventory is a balanced market between a buyer and a seller. Anytime you get above 6 months, you're more in a buyer's market. Anytime you're below that 6 months inventory, you are in a seller's market, and the lower you get, the stronger market it gets for these sellers. This is information that I put together myself because I couldn't find the data that I wanted, so I download all the information off the MLS every month, analyze it, and figure out how much inventory is in the city and how fast it's moving to kind of get the best indication of which way prices are going to go. And since we're seeing this strong seller's market, that means the demand is high for properties, but there's not a whole lot of property out there for people to choose from, which is what's increasing your price up to this 214,000 price ranges. So now you can see the median sales prices, how it's really just started shooting up at a really fast pace, out surpassed last month's highs. If you look at last year, you can see we're at 195 and topped out about 197 for over the year, so about a $2,000-$3,000 increase, and now we have gone from like under 200 or right at 200 to 215 this summer. And next summer I would expect, if everything moves traditionally, to that kind of playing out a little bit for the month of July, but we'll have to see if it continues this rate of increase going up. Another thing that you guys can take away from this is this shows that summertime is the best time to be selling houses. You can see that prices drop and dip down as far as the median sales prices that are being sold on the market in the colder months. So this little blip you're seeing here is your December sales spike, and this is January, and it kind of takes off into the summer from there. So plan your renovations, plan your rental properties to try to sell around that time frame. Monthly rents does the same thing. Here's your cold months, here's your warm months. So we've kind of planed out a little bit at just over the 1480, but we still did increase from last summer. So same thing, if you're renting properties, try to get those leases starting and ending around the April, May, June, July timeframe, because that's when you're going to get the best to increase those rents. The 20-year unemployment, I just kind of track this stuff because I would expect if you start to see unemployment numbers rising, I would expect to see that roll over into months of inventory and then start rolling over into the prices. And so I like to just plot this out and just kind of see, hey, where's it been in the past? How did it act in the past? and where are we at today. So you can see that we've just kind of bounced around here in the bottom for some time now, and we're just kind of holding steady just down here in those sub 4% unemployment numbers. But one thing I would want to make sure is you can see how fast these unemployment numbers do spike up. You're talking a matter of just a few months, you go from 3.5 up to 7.5. So that's something that happens a lot quicker than what prices would reflect. So I want to use that as an early indicator if there's any kind of recession coming and where prices might be heading. So now I get a lot of questions like, hey, John, where is the best place to market? Where are the best properties? Where am I going to see the highest increases in profits? So I track the months of inventory by zip code and by price range to see where is the most pressure for the prices to increasing, keeping in mind that once you're below the 6 months inventory, that you're going to see a little start leaning towards a seller's market and prices starting to increase. So you can see in San Antonio, this is the 250, 300,000 price range is still up there, but we're still in 3 months. So it's still a pretty strong seller's market, but there's a bit of a shelf there. So you start dropping below that and you get down to the 200 to 250s, the 150s to 200s. There's not a lot of inventory across the city. So now I'm a licensed agent and I have represented some buyers that have been trying to buy in the 150 to 200 range. And if you submit an offer, you're usually competing with 3-4 other offers if the house can qualify for financing, because there's a lot of people that are wanting to buy houses there, but not a lot to choose from in the city because we've been in such a strong seller's market for so long. It has really pushed prices up. And so that's something to keep in mind if you're going into renovations as well, because this is potentially your holding costs. So if you're in a hard money loan in a $300,000 price range and you got 4 months inventory across the city, you want to take that into account as far as a holding time once your rehab is done, because you don't want to be paying $3,000, $4,000 a month because that's coming, or for your interest payment, because that's coming straight from your bottom line. Now also do it by the best zip code. Where is the lowest months of inventory in the city, where you're going to see the highest increases in price month over month and have the most pressure for prices to increase. And it's no surprise that the majority of these, except for, well, every one of them this month is under the $250,000 mark. A couple of them are into the 200 or 242 at the 78249, but all of these are, 2.1 and below. So there's going to be a strong pressure to prices to continue to increase in those zip codes since there's a lot of demand and not a lot of inventory. So it's something to keep in mind if you're trying to renovate houses or if you own houses in those neighborhoods. Expect prices to continue to rise in those areas. Now we also do worse zip codes. It's where you get the highest months of inventory across the city. And except for 78207 and 78228, all of these are in the 300 and 400,000s. So what that's going to do is you're going to have a lot of inventory across the city. So like I said, that is your holding costs. You want to take that into mind if you're renovating houses in those areas, that there's a lot of inventory to choose from in those price ranges. So you really want to kind of see what your competition is on the open market. Now, something that has piqued my interest in this is the 78207. I think this is the second month that this has finally appeared on or had enough data to actually come onto my spreadsheets and how I analyze these numbers, because I won't look at a zip code unless it at least has 30 properties live. 7207 is just west of downtown and is traditionally the cheapest real estate in San Antonio. And with that, the majority of houses can't qualify for any type of financing, so they never get onto the MLS. There are a lot of off-market sales, a lot of investor sales, a lot of low sales in the 20s, 30s, 40,000s. But now there's enough properties hitting live to the MLS that are being sold that are getting into that 77,000. So if anybody that knows that zip code, several years ago, you could be picking houses up for next to nothing in those zip codes, and now houses are starting to sell in the 77,000. So prices are starting to increase and houses are starting to sell on the MLS, which means they might be able to start qualifying for financing. People are going in, renovating them, and banks are lending in that area. So it's something to kind of keep in mind and just food for thought, and we'll continue to watch to see if that months of inventory starts to drop and make it somewhere else on the spreadsheet. And that's pretty much it. I hope you guys enjoyed this. And like I mentioned, if you guys have any questions or any comments or would like a PDF copy of the slides, you can go ahead and shoot me an email here at john@primehomes.com, and I'll be more than happy to send you a PDF copy of it. Visit our website at primehomes.com. Check us out on Facebook. Otherwise, have a good evening, and I will see you guys next month.